Day one here at the Denver Gold Forum, and joining me now is Philip-Klapwijk of Thomson Reuters GFMS. Philip, so nice to be reunited with you once again.
Pleasure to be here.
So I have a good question for you to start the day off, Philip. Do you think if we'll see higher commodity prices, that could translate into a slower economic turnaround?
Yes, I think if commodity prices reach certain levels, they have a negative impact on global demand because purchasing power is reduced, particularly if people have to face, for example, higher energy costs, and that would lead to a slower rate of economic growth because those who benefit, for example, from higher oil prices are relatively few in number compared to the many who would be negatively affected by higher oil prices. So most developing countries, most parts of the US, Europe will suffer, and a few lucky individuals in Russia and in the Middle East would gain.
Right. So we spoke recently, GFMS, Thomson Reuters GFMS is forecasting 1800, 1860 gold by year end, correct?
Yes, we think that the rally that we're currently embarking on will probably take us up to about 1860 this year. I'm not sure it's going to be a straight line move, of course, but I think we're looking at a high of around about 1860 this calendar year.
Right.
First half of next year, 2000 is certainly a possibility.
Wow. So what would be fueling this rally, Philip?
Well, what's fueling it is a loosening of monetary policy globally. And this is not just in the United States, where we expect QE3 to be imminently announced, but also we're seeing in Europe with the European Central Bank's bond buying program now. We're looking at emerging market economies where central banks, such as the Chinese Central Bank, are embarking on looser monetary policy in an effort to stimulate their economies.
Okay, so you seem confident that QE3 will happen.
Yes, I'm very confident. I think the payrolls numbers were so bad that the Fed is going to have to take action at the next FOMC meeting.
Okay. Do you think that's the best solution to be taken, though?
That's a very interesting question. I'm really thinking that they're pushing on a string here. I'm not convinced at all that further purchases of securities by the Fed, or for that matter, zero interest rate policy, really is having a very positive effect at this point in time. Perhaps one could argue that in the wake of the global financial crisis, such emergency action was justified. But I think now actually ultra-low interest rates are more of a problem than a cure.
Right. So also towards the end of last week, we saw two big events happen, Mario Draghi speaking and jobs numbers coming out on Friday in the US that really caused a pop in gold.
Well, yes, and understandably, because I think people are looking, firstly, if we look at the situation in Europe, a fix which, in the short term at least, is reducing risk in terms of the euro. That's led to a pop in euro against the US dollar, which, as one might expect, has helped to stimulate higher gold prices. And also, it, at the same time, stimulates fears of higher potential rates of inflation further down the path, particularly for German investors and others who are more inclined to take the sort of Bundesbank line that these radical, innovative policies in Europe are more likely to stimulate inflation in the longer run.
Okay, so now, Philip, you're based in Hong Kong. What can you tell us about trends you're seeing there in Asia in terms of demand for gold?
Well, I think in China, we had a pretty rough second quarter. We had the first drop in gold demand there, I think, since 2007. Now, we expect, having said that, things to pick up a little bit now. In China, the possibility of higher gold prices, I think, will lead to some pickup in demand as buyers look to anticipate higher gold prices and bring forward their purchases.
Okay, good. Philip, thank you so much for your thoughts today.
It's a pleasure. Thank you.
And what are you expecting to take away from the Denver Gold Forum?
Well, it's a fantastic meeting place for the industry, particularly on the mining front. So for me, it's very interesting to hear what some of the speakers have to say about the industry and also to meet some of our friends on the mining side.
Absolutely. We're excited to be here as well. Again, thank you, Philip.
Thank you very much, Daniela.
Thank you for watching our coverage from the Denver Gold Forum. We'll have more videos coming up on Kitco.com. In the meantime, you can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.